the #1 killer of women.
Taking the lives of 1 in 3.
That's more than all forms of cancer combined.
For too long, heart disease and stroke have taken the lives of the women we love.
But we're not giving up.
Because we have something better.
Stronger, more powerful.
We have each other.
When we come together and go red,
the more power we have against our greatest health threat.
Visit goredforwomen.org today to learn more.
Creating a trust helps you prepare for the unknown. Revocable and irrevocable trusts are most common, but contain significant differences. Cushing & Dolan's new guide called The Difference Between Revocable and Irrevocable Trusts may help you choose the right trust for you and your family. Call 866-848-5699. That's 866-848-5699, or request the guide online at LegalExchangeShow.com. The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and/or Armstrong Advisory may contact you offering legal or investment services. Cushing & Armstrong do not endorse each other and are not affiliated.
Hi, this is Chuck and Mike from the Armstrong Advisory Group, and our guide this month is titled The Complexities of Inherited IRAs. Mike, a lot of this complexity started at the end of 2019. What are we seeing now in terms of how inherited IRAs are treated today versus how they were treated before?
The biggest change is for people other than a spouse, and I'm going to overly generalize here, but as a rule of thumb, if you are inheriting a retirement account from someone other than your spouse, most likely you are going to need to empty that account within a 10-year time period and probably take a required minimum amount every single year, although the IRS has been willing to waive that since the rules were changed.
Now, as you mentioned, they've waived that each of the last 4 years, but there's no guarantee that they will in the future. Is it worthwhile for investors to talk with their tax professional and advisor to figure out what the best plan is to minimize taxation over that 10-year period anyways?
I mean, even if they don't waive the penalty, even if you do have to take a minimum amount, you should be planning this, right? Because if you just wait, then you might end up being surprised at the end of year 10 when all of a sudden I've got this massive account to withdraw and I have a whole bunch of taxation to realize, and it starts impacting everything from my Medicare premiums to my capital gains rates to everything under the sun.
The guide this month is titled The Complexities of Inherited IRAs, and there are 2 ways you can request it. The first is by calling 800-393-4001. The second is by going to ArmstrongAdvisory.com. That phone number again is 800-393-4001. Or you can request the guide at ArmstrongAdvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. There's no better place to vacation than the United States Virgin Islands. St. Croix, St. Thomas, and St. John have everything you need to enjoy a spectacular romantic getaway or a week-long family vacation. From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. The weather is perfect all year round, so book now and experience the most beautiful beaches anywhere in the Caribbean. World cuisine, iconic history, a wide variety of water sports, and an energetic nightlife. There's no money to exchange, no passport required, and travel from New England could not be easier. Make your plans now by going to visitusvi.com. Learn about all 3 islands and plan the ideal vacation for you and your family. America's Caribbean paradise is waiting for you. So head to visitusvi.com for more information and to reserve your trip today. Go to visitusvi.com. That's visitusvi.com.
It happens all over Massachusetts.
Can you tie my shoes?
In every home and every community.
Be careful on your bike.
Learning can happen anytime, anywhere.
We'll see you at practice this weekend.
And no matter how learning takes place in your family's life, DESE is there as your partner. The Massachusetts Department of Elementary and Secondary Education. Never stop learning. Find out more at mass.gov/back-to-school.
Sponsored by the Massachusetts Department for Elementary and Secondary Education.
Environmental nonprofit Ocean River Institute is working with communities to tackle climate change with nature-based solutions that feature slowing water down and building more soil with grasses and plants. Research indicates that people acting in their own neighborhoods can build an inch of soil in a year and slow sea level rise down by as much as 25%. Please visit oceanriver.org for more information on opportunities to make a difference and go the distance for savvy stewardship of a greener and bluer planet Earth.
The Financial Exchange is produced by Money Matters Radio and is hosted by employees of the Armstrong Advisory Group, a registered investment advisor that provides investment advisory services. All opinions expressed are solely those of the hosts, do not reflect the opinions of Armstrong Advisory or anyone else, and do not guarantee profit. Investments can lose money. This program does not offer any specific financial or investment advice. Please consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong and Money Matters Radio do not compensate each other for referrals and are not affiliated. This is the Financial Exchange with Mike Armstrong and Paul Lane. Your exclusive look at business and financial news affecting your day, your city, your world. Stay informed and up to date about economic and market trends, plus breaking business news every day. The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. Help us support our great American heroes by visiting dav5k.boston and making a donation today. The DAV 5K Boston is presented by Veterans Development Corporation. This is the Financial Exchange with Mike Armstrong and Paul Lane.
Good morning and welcome back to the Financial Exchange. We continue a slew of data coming out this week, a lot about the housing market. In particular, we got some data from S&P Case-Shiller on home prices. I have a hint for you. They are continuing to go up in spite of inventory increases. And just 5 minutes ago, we got data from the Conference Board on Consumer Confidence, so we'll be diving in there. But first, I think an important lesson and reminder that some investors may have forgotten recently, which is stocks also go down, it turns out. And Nvidia just snapped their, what was it, Paul, a 3-day losing streak on their stock that sent the stock down over 10% over the last few days and gave up their position as the largest company in the world.
Yes, they do go down. I'm surprised that Bloomberg was going to take a stab at saying that this headline of Nvidia's 13% stock rout has traders scouring the charts for support. To me, 13% after being up 150% year to date, you got to expect a little bit of a decline like you were mentioning, but I won't focus so much on the technical analysis that's spewed out in this piece just because I'm not someone who is intimately familiar with technical analysis, but I do want to speak more to the broader idea of Nvidia and its valuation and just what we've seen from its growth this year. It, like Mike mentioned in this piece here, was at one point the most valuable company. It surpassed Microsoft in terms of valuation, reaching a peak market cap of $3.34 trillion. And what Nvidia has seen over the last 5 years is just tremendous results. Their stock price has gone up 4,000% in the last 5 years. But on the backs of that, they've grown their sales at 64% a year over the last 5 years. I mean, we're just talking about blowout numbers. But here we sit where they're trading at 76 times trailing operating earnings. To give listeners out there a comparison of what 76 times earnings means relative to its peers, it's about twice as much as what Microsoft and Apple trade at, and 3 times as great as the S&P trades at from a price to earnings perspective. So,
just practically speaking, if you had a few $1 trillion laying around, Paul, and decided, hey, I'm going to buy Nvidia and I just want to operate this company,
right?
What the 76 number means is that it's going to take you 76 years to basically, at their current pace of earnings, assume it doesn't grow anymore, 76 years to pay yourself back on that investment, which I like putting in those terms sometimes because it kind of speaks to the gravity of the situation.
Really helpful just to get a context for listeners out there, because you can throw out numbers and all the jargon of price to earnings and things like that, but just think about conceptually, if you wanted to buy Nvidia today, that is what it is trading at from a market perspective, and this is what it earns. This is the asset that you're buying and what it earns. So what that means is one of two things needs to happen. One, to justify that valuation, earnings need to continue to grow gangbusters. For anyone who owns a business out there, doing 64% sales growth every single year for a 5-year period, it's really damn hard. And it's hard to continue that pace because what's going to happen? There are other competitors who have big bank accounts that are ramping up their research and development, and conditions can change. AI, we talk about it all the time now. We think it's going to be, not we, you, and I, but the investment community thinks it's going to be the next best thing since sliced bread. Maybe it's not, Mike. Maybe it doesn't develop to what people think. And as a result, you're not able to get that commensurate earnings growth that you're pricing in. And so in this Bloomberg piece, a separate one that I was looking at, basically in order to get similar to a valuation to what Microsoft and Apple trades at, the earnings growth that they would need to see from an earnings per share perspective would need to be somewhere in around 40+% growth rate over the next 3 to 5 years. It's great what they've done. It's just they are really priced to perfection right now, and perhaps that speaks to some of the smaller sell-off here. To be clear, the small sell-off, there's no news that points to anything changing with the company, but Cisco was a good example of this. In the 2000s, they were really the darling of the tech bubble, where they too were growing their earnings at 71% operating earnings year over year for close to a 10-year period from 91 to 2000. What happened is the tech bubble burst. Their earnings capabilities were significantly diminished. And then after that, they traded at 39 times earnings. They peaked at trading at 233 times earning, which is just staggering to even read about, Mike. But really what happens with companies is often they will return to their mean from a price to earnings perspective, or you just got to earn into that valuation, and that's where Nvidia sits right now.
Look, everything that they have done so far in terms of operating this business has been just outrageously impressive. Like, the sales growth that Paul was talking about, while would be difficult to continue, for what they've done over the last few years, it is just outrageous. It just does not happen in nearly any companies out there. I think the point that you make is a reasonable one, Paul. I probably call myself guilty here. I probably would have said that Nvidia is priced to perfection a year ago, or 6 months ago, and I would have been wrong, right? Because as you pointed out, they stock rallied another 100-some-odd% this year, and so this doesn't tell you anything about timing of any of this. It doesn't tell you anything about what's going to happen with the stock in the future. It just tells you that they've got a wall to climb. They have successfully climbed that wall for a few years in a row now, and we'll have to see what comes next for this company. The real risk to it is just, they're priced to perfection. But you know what? They have been for over a year, and they've delivered on that perfection. And so you have to give it to them to some point. One piece in this article from Bloomberg that I just, people read this stuff, and there's parts of it that I find useful and other parts that I find useless. And there's one piece here, like you said, you're not a technical analyst, nor am I. But when I read stuff like this, I find it so useless. This is from Daniel O'Regan, a managing director of equity trading at Mizzou Securities. Quote, among Nvidia sell-offs of this scale, the stock tends to rebound on the fourth day, which would be today, about 63% of the time. I just don't know what anyone can possibly do with that information, and I'm sure there is someone somewhere who's going to place a massive options bet on Nvidia based on this information at some point and get absolutely hosed on it, because these exact type of trends are exactly what's meant to be broken. That's what happens with the stock market, is the past what's happened over Nvidia stock or any company's stock over the last 2 years by definition is almost meant to be broken the next time it happens. The stock is moving up today. You've got Nvidia shares and the Nasdaq as a whole moving upwards this morning. Nvidia shares in early trading up 3.5%, while the Nasdaq is up about 0.8%, and the Dow is off 0.33%. So reversing a bit of yesterday's action, but I find technical quotes like that to be very entertaining, but almost useless in terms of practical information.
That reminds me of Brian Fantana from Anchorman's quote of 60% of the time it works every single time.
Yeah. That's a good comparison to make on this one. Let's take a quick break here. When we come back, I want to talk a bit about the housing market. We received data this morning. It's a little bit outdated at this point because the S&P Case-Shiller home price index data that we get is a couple months delayed, but we did just receive it this morning. I want to talk about home prices, supply, where we're seeing inventory tick up, and why we're not seeing any sort of relief in terms of pricing. That's next on the Financial Exchange.
The Financial Exchange is now available on your Alexa smart speaker. Ask to play the Financial Exchange and catch up on anything you might have missed. This is the Financial Exchange Radio Network.
The rules regarding inherited IRAs changed a few years back with the passing of the Scour Act, and with the law being updated again in 2022, it's even more important to develop a strategy to help you make the right decisions regarding your retirement accounts. Hi, this is Chuck Zada from the Armstrong Advisory Group. Inheriting money from a spouse is common and will likely be a painless process for you. However, your heirs could be subjected to lofty tax bills if the distribution of your accounts are not coordinated properly, especially if you're inheriting one from someone other than your spouse. Don't let this happen to you. Call the Armstrong Advisory Group at 800-393-4001 and request our new guide called The Complexities of Inherited IRAs. That's 800-393-4001, or you can request it online at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Are you looking to volunteer for an amazing nonprofit organization that helps our veterans? The DAV Department of Massachusetts Transportation Network needs volunteers right now. This network provides free transportation to and from any VA medical appointment for veterans of all eras. To become a volunteer driver, you do not need to be a veteran or a DAV member. You just need to have the willingness to help our veterans and have a valid driver's license. Sign up now at davma.org. That's davma.org.
Creating a trust helps you prepare for the unknown. Revocable and irrevocable trusts are most common, but contain significant differences. Cushing & Dolan's new guide called The Difference Between Revocable and Irrevocable Trusts may help you choose the right trust for you and your family. Call 866-848-5699. That's 866-848-5699, or request the guide online at legalexchangeshow.com. The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and/or Armstrong Advisory may contact you offering legal or investment services. Cushing & Armstrong do not endorse each other and are not affiliated. There's no better place to vacation than the United States Virgin Islands. St. Croix, St. Thomas, and St. John have everything you need to enjoy a spectacular romantic getaway or a week-long family vacation. From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. The weather is perfect all year round, so book now and experience the most beautiful beaches anywhere in the Caribbean. World cuisine, iconic history, a wide variety of water sports, and an energetic nightlife. There's no money to exchange, no passport required, and travel from New England could not be easier. Make your plans now by going to visitusvi.com. Learn about all 3 islands and plan the ideal vacation for you and your family. America's Caribbean paradise is waiting for you. So head to visitusvi.com for more information and to reserve your trip today. Go to visitusvi.com. That's visitusvi.com.
Hey, listen, are you a 50-year-old person looking for term life insurance? Then you need to talk to Bob. Bob specializes in helping people find $1 million or more of term life insurance for a couple of $100 a month. Look, you need to know there's a price war in the term life insurance business, and you may be paying too much. Call Bob, and he'll shop and see how much money he can save you. Look, this could be the last term life insurance policy you ever have. Your rates are guaranteed for the next 20 years. That's right, guaranteed level rates for the next 20 years. And if you're a smoker or your health is not perfect, Bob has great rates for you too. So for $1 million of term life insurance coverage for a couple of $100 a month, call Bob right now. 800-965-7987. 800-965-7987. 800-965-7987. That's 800-965-7987. Paid for by Term Direct.
Breaking business and financial news first throughout the day. Only here on the Financial Exchange Radio Network.
The Financial Exchange has built an incredible partnership with the Disabled American Veterans Department of Massachusetts, and we can't wait to take part in this year's DAV 5K set for Saturday, November 9th at Fort Independence on Castle Island. Registration's now open. You can help our great American heroes by walking, running, or simply making a donation. Your gifts will support services such as the Veteran Advancement Program, which offers permanent and affordable housing opportunities for veterans and their dependents. Learn more at DAV5K.Boston. The DAV 5K Boston is presented by Veterans Development Corporation.
On the last Tuesday of every month, the folks over at S&P Dow Jones Indices put together a little read on home prices across the United States. They have a few different indices that they do, but long story short, they take all the home sale price data from the last 3 months and they compare it to a year ago and try and give us a sense of either in certain cities or all across the country what's happening with pricing on single-family homes. And so they just released this data at 9 a.m., have it out now this morning, and generally what you find, the one that I like to quote is this 20-city price index. So they look at pricing in Atlanta, Boston, Charlotte, Chicago, Cleveland, Dallas, Denver, Detroit, Las Vegas, LA, Miami, Minneapolis, New York, Phoenix, Portland, San Diego, San Francisco, Seattle, Tampa, and DC. So 20 largest cities taking a look at home pricing. And what you find is in the month of April, you still had prices up a good 7.2% on a year-over-year basis. Also, the annualized return on housing across the country for the last 5 years, according to the same measure, 8.88% per year. Remember that when we're talking about pricing on housing, this is kind of usually half the equation of how people make money on housing. And I know primarily single family, we're talking about people's residences, but imagine you bought a rental property 5 years ago and were renting it out this whole time. You're talking about nearly 9% of annual price appreciation, plus what you're getting on that property in terms of rent. It's been absolutely wild to see, as everyone knows what has happened in the housing market over the last few years. But what I find fascinating at this stage is that, look, in spite of inventories ticking up, in spite of all of these different things occurring, pricing continues to go up and the pace of sales continues to decline. In fact, for February through May, across the United States, we are looking at the slowest pace of existing home sales since 2011. And I cannot get over those numbers. I know there's a demand side of this equation, but it is just wild to see what we are still seeing in the housing market right now.
What I'm sort of sick of hearing about, Mike, is this interest rate dance that is talked about in so many of these pieces here, where I completely understand that mortgage rates hovering around 8% is certainly not good for the housing markets. Them coming down to mortgage rates coming down to perhaps 6% or so would certainly be a welcomed break for buyers out there. But I'm just not willing to hear that mortgage rates getting to 6% are going to be enough to really stimulate this housing market, because I think there's going to be a trade-off in a sense where if rates get down, let's take it even further and say perhaps they can get down to 5%. Housing prices are still going to increase because you're going to bring a lot more buyers back on the market. And I'm just not willing to buy into this chatter just yet that because the inventories, I get it, are increasing, but you always reference this comparison of inventories between where we sit today in May of 2024, where we have the data, versus where they were 5 years ago. And again, you can cherry pick states to tell a different story, but the general consensus across the country, particularly in the Northeast where many of our listeners reside, is this: I'm just not going to get there that there's going to be enough inventory to really spur a huge decline in pricing.
Well, I would have thought so, but you've been absolutely correct, Paul. Let's take a look at, one state where you have seen a dramatic uptick in inventory, and that's Texas. I know I sent you this information ahead of the time, but the St. Louis Federal Reserve puts together this data. And right now, at least in the month of May, the inventory levels in Texas were 102% of where they were in May of 2019. There is 42% more inventory in Texas than there was this time last year, and yet sales in Texas, not even just pricing, like the number of sales occurring in Texas right now are lower than they were in 2023. And so what does that tell us? It tells us that, look, there's clearly a mismatch in terms of buyer expectations and seller expectations. And I don't know what's motivating it, because let's say I'm one of those sellers in Texas and I'm seeing, again, this is going to vary by city, but I'm seeing a dramatic uptick in the number of homes for sale. My home isn't selling. You've still experienced the dramatic price increases that we've seen over the last few years. And I'm just so confused as to why you would be so tied to the price a year ago that your neighbor sold for, rather than reducing pricing and taking a lower offer. I really just don't quite understand that. And I guess that ties back to what you're talking about, Paul, which is, hey, if rates get cut, then all these new buyers are going to come and maybe prices will actually increase. But think about it, right? You're in Florida, you're in Texas, and this isn't a good comparison because I know a lot of our listeners are in Connecticut and Massachusetts, where there just are no homes for sale, and so they can demand whatever price they want.
Right.
But you're in Florida, you're in Texas, your home's been sitting on the market for 6 months, and your realtor says, hey, we would need to drop the price by 5%. Mm-hmm. What does that do? Make it so that, I've earned 42% on my home in terms of the last 5 years compared to 55%? I'm so confused by the fact that we're just not seeing sales going through at this stage. And yeah, clearly it has to do with some divergence between demand and supply and price expectations of those sellers.
And you also have a unique situation where the heavy inventory markets are the three largest states. So I think that it kind of boosts the national number a bit because it's Florida, Texas, and California, right? That we've seen the most kind of inventory jump, I believe. Or at least Florida
I think
and
Arizona.
Texas. Okay.
Yeah, Florida and Texas. Arizona's up there. California is about at the national average. I think California inventory is about 66% of where we were in 2019, and that's about where the national average is. But like I mentioned, across the Northeast, across New England, the single state with the highest levels of inventory compared to 2019, it's Massachusetts, and you're less than half.
Right.
You're less than half, fewer than half the homes for sale as were for sale in May of 2019. So the price story here in the Northeast, I fully understand. The price story in the rest of the country, I have to say I'm quite confused by, because look, there are a lot of sellers that I know did not sell their home over the last few years because they were either mortgage locked or they didn't have to. But we talk about those 5 Ds of housing. You have kids, so diapers. You get married, diamonds. Somebody passes away, death.
Downsizing.
You got them printed right in front of you. This isn't fair.
My vision isn't great. They could be a bigger print for me at the office here, but downsizing, divorce.
Divorce. There we go. Yep. There's the last one.
Diamonds.
Yeah. You can put these things off for a period of time, but
eventually you need to get divorced.
Well, eventually you got to stop living with your ex-spouse, right? I mean,
right.
The divorce may have already happened. So I do think, to your point, I don't know what happened. I don't know what ends up happening with pricing, but I do think we are going to continue to head towards higher inventory over the next couple of years. And what happens with pricing is going to be entirely dependent on really 2 factors that are interconnected: interest rates and the state of the economy. And the trend on interest rates has been that they've gone up substantially. Most experts out there don't think that they're going much higher than this. The trend on unemployment has been, at least recently, a bit of an uptick. And so, again, if you're one of those sellers out there that's putting this off for a while, you play a bit of a risky game here in terms of where this economy could go in the future and what that could mean for what you're actually able to demand on the price for that home. Because I struggle to see how there wouldn't be more homes for sale 12 months from now. Quick break. We'll be right back with Wall Street Watch.
Like us on Facebook and follow us on Twitter @TFE Show. Breaking business news is always first, right here on the Financial Exchange Radio Network.
Are you looking to volunteer for an amazing nonprofit organization that helps our veterans? The DAV Department of Massachusetts Transportation Network needs volunteers right now. This network provides free transportation to and from any VA medical appointment for veterans of all eras. To become a volunteer driver, you do not need to be a veteran or a DAV member. You just need to have the willingness to help our veterans and have a valid driver's license. Sign up now at davma.org. That's davma.org.
Creating a trust helps you prepare for the unknown. Revocable and irrevocable trusts are most common, but contain significant differences. Cushing & Dolan's new guide called The Difference Between Revocable and Irrevocable Trusts may help you choose the right trust for you and your family. Call 866-848-5699. That's 866-848-5699, or request the guide online at LegalExchangeShow.com. The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and/or Armstrong Advisory may contact you offering legal or investment services. Cushing & Armstrong do not endorse each other and are not affiliated.
Are you retired like me and you just found out you owe the IRS a ton of money? Well, what would your life be like if they took your retirement savings away from you? They can do it and your property. If you owe the IRS back taxes or you haven't filed in a while, the Tax Relief Line is here to help you. They can stop the IRS from taking your retirement savings. If you qualify, you could have your tax bill reduced to zero. That's right. If you're retired and you owe the IRS a lot in back taxes, you could have your entire tax bill reduced to zero due. The IRS has now hired thousands of new employees, so they're ready to come after you. Don't let them take your retirement savings or property. Make this free call now.
800-251-2153. 800-251-2153. 800-251-2153. That's 800-251-2153.
There's no better place to vacation than the United States Virgin Islands. St. Croix, St. Thomas, and St. John have everything you need to enjoy a spectacular romantic getaway or a week-long family vacation. From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. The weather is perfect all year round, so book now and experience the most beautiful beaches anywhere in the Caribbean. World cuisine, iconic history, a wide variety of water sports, and an energetic nightlife. There's no money to exchange, no passport required, and travel from New England could not be easier. Make your plans now by going to visitusvi.com. Learn about all 3 islands and plan the ideal vacation for you and your family. America's Caribbean paradise is waiting for you. So head to visitusvi.com for more information and to reserve your trip today. Go to visitusvi.com. That's visitusvi.com.
This is Tucker Silva of the Financial Exchange Show, and I'm joined today by estate planning attorney Todd Lutzke with the law firm of Cushing & Dolan with your Financial Exchange Quick Tip of the Day. And today we're talking about the differences between revocable and irrevocable trusts. Todd, when would it make sense to use an irrevocable trust versus a revocable trust?
Yeah, so in this case, you really need to think about a couple of things. One, how much you're worth. Obviously, if you're worth, well over 4 or 5 million, 6 million, probably you're self-insured, so you're not so concerned about nursing home planning, and therefore the irrevocable Medicaid trust that we're talking about here might not be as applicable. But 4 million and under, folks are saying, and the other issue would be over age 60, let's say. And there's no rule of thumb, but 60, 65 is a great time to be thinking about protecting assets from the nursing home because it takes 5 years to do it. So if that's the case, then an irrevocable trust would make sense. And don't be put off by the word irrevocable, because you will find that the differences between revocable and irrevocable, at least these Medicaid trusts, is very, very few and far between. You're still very much in control. You live in your house. You enjoy your income. You manage your money. You buy and sell your property. It doesn't matter that it's irrevocable, so don't be afraid of it.
The estate planning experts at Cushing & Dolan have written a brand new guide that will answer the most common questions you have about the differences between revocable and irrevocable trusts. You can request this guide by calling 866-848-5699. That's 866-848-5699. Or you can also request it from their website, LegalExchangeShow.com.
The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and/or Armstrong Advisory may contact you offering legal or investment services. Cushing & Armstrong do not endorse each other and are not affiliated. Time now for Wall Street Watch, a complete look at what's moving markets so far today, right here on the Financial Exchange Radio Network.
Well, markets are in mixed territory to this point as traders continue to monitor the recent pullback of Nvidia's stock and also digest new comments from Fed officials speaking this week. regarding potential interest rate cuts. At the moment, the Dow is down by about 0.33% or 117 points. S&P 500 is up 0.25%. The NASDAQ popping a little bit today, up over 0.75% or 145 points. Russell 2000 down by 1/3%. 10-year Treasury yield flat at 4.24%, and crude oil down about 0.25%. Trading at $81.42 a barrel. Speaking of Nvidia, which has retreated 13 point before the open, at least, from its recent peak in the past 3 sessions, that stock bouncing back today by 3%. Meanwhile, shares in Airbus down about 4% after the plane manufacturer said it will miss its annual target for commercial aircraft deliveries and took an impairment charge related to its space activities. Elsewhere, China approved weight loss drug Wegovy, sending shares in Novo Nordisk up by 3%. The European Union charged Microsoft with antitrust violations related to the tech giant's bundling of its Teams collaboration tool with Office 365 and Microsoft 365. Microsoft relatively unfazed, up actually by about 0.25%. Solar Edge Technology shares are sinking by 15% after the company announced a new debt offering where it will offer $300 million worth of convertible notes due in 2029. And wholesale pool supplies distributor Pool Corp revised its full-year earnings guidance down from previous forecasts. That stock down today by 8% in reaction to the news. I'm Tucker Silva, and that's Wall Street Watch.
Returning to the housing market for a moment here, 2 different policy announcements, one from Treasury Secretary Janet Yellen, another from the Healey administration in Massachusetts. On the national side, Treasury Secretary Janet Yellen has promoted new investments yesterday in Minneapolis, including a fund that would provide $100 million to support affordable housing financing. So I believe what you're talking about here is developers having access to a new financing arm to develop affordable housing. The second piece is, a more targeted thing here in Massachusetts, where the Healey administration is offering $15 million to help Boston convert office space at the same time that Boston Mayor Michelle Wu is offering developers as much as a 75% discount on property taxes over the next 29 years. I fully recognize we have an affordability crisis. I don't see anything in here that is of the dumbest types of policies, which we frequently talk about, like, hey, let's offer more tax breaks on down payments or something along those lines, because all that does is increase the cost of housing by increasing demand. I also don't know that $100 million in affordable housing financing is going to do anything to move the needle. If we're spending $15 million in Boston just to convert office spaces, then I have a tough time believing that that's going to move the needle. But it is really what I did find interesting about this piece, and I've read about this, and I'm sure our listeners down the Cape or on the islands are very familiar with it. But those areas of the country, and the Cape and the islands is certainly among them, where housing inventory and affordability is so limited, it's really starting to create some practical problems, right? So think about emergency personnel on the island of Martha's Vineyard. You're a police officer, you're a paramedic, you're a firefighter. You almost certainly can't afford to live in those places. And it's not as though you really want your police officers commuting from off-island every day, right? That seems like you need a 24-hour police force, so I don't know how that would work in the first place. But let's say all of your police officers are commuting on a daily basis and we happen to be getting hit by a hurricane. Well, then you're not going to have any police force on the island when you actually need it. And so I don't really know what the solution is in a place like Martha's Vineyard, other than a lot of this comes down to the same stuff we've talked about, which is zoning and willingness of residents to allow for different types of development that they oftentimes find unattractive, unappealing, right. And the only other result that I can think of is that wages, what would you have to pay somebody to be able to afford to be a 911 operator dispatcher on the island of Martha's Vineyard? Like, if they want to be able to rent a property on the island, on the vineyard during the busy months, which is when you need the 911 dispatcher, you're going to have to pay this person $250,000 a year.
Right.
Right. Where are your property tax bills going to go in that case? And so the Cape and Islands are a very specific example here, and it's probably an exaggerated example, but these types of real problems are cropping up all over the place. And go talk to anybody that lives full time on the Cape, and they'll tell you that all the people that do work on their homes don't live there. They have to commute from the mainland and drive over onto the Cape and make a whole bunch more money than they would on the mainland. And that's kind of how it's worked, which is fine for the Cape in most cases. But when you talk about Martha's Vineyard and Nantucket, pretty unfeasible.
Yeah, it's a couple of interesting pieces here. Like you mentioned, the Nantucket one, I had heard a story anecdotally about a firefighter commuting from Dorchester, but just doing, a 24-hour shift and, sleeping for 8 of it and then taking the ferry right back afterwards. So just what you were mentioning there, where it's just a tremendously long haul, but it does become a little bit concerning if you deal with adverse weather conditions in that situation. To me, I've been tracking the downtown office buildings in Boston, that story, for a bit. You mentioned the 75% off on property tax bills for 29 years. The challenge has been for commercial real estate developers is there's a significant outlay that goes into these types of projects. It's really a full gut and reno job when you're talking about flipping an office space into any type of residential living. Just think about from the bathrooms to the windows. It's a whole different setup when you have residential versus office. And the other tricky part is they want, meaning Boston, a heavy percentage of these housing units to be affordable housing, about 20%.
1/5.
Yeah. And from a cap rate perspective or from a net income perspective, when you are going to take on a significant project as a commercial real estate developer and deploy a ton of capital to renovating a building, to have 20% of your units be hamstrung, in a sense, just from a profitability standpoint. I'm not arguing with the social merits behind giving affordable housing out there. That's kind of the sort of back and forth that you go through in your mind is, hey, 1/5 of my units I'm really not going to be able to charge market rent. That weighs on your cash flows when you're looking at it as an investment. So it's a hard juggling act. That's what the $15 million is for, to be clear, to kind of lessen some of the burden on the outlay of capital to renovate it. But it's not an easy deal, and that's why you've only seen 9 proposals so far for this offering.
Yeah, probably why they need to incentivize with the 75% off property tax bills for 3 decades in order to get them to develop these things. And all of this spells probably bad news for the city of Boston in terms of its funding, because the city of Boston has relied historically heavily on commercial property taxpayers, and those collections are in the toilet at the moment. I do hope that the city of Boston is staying focused on the actual goal here, which is housing affordability rather than any other goals, right? They talk about increasing the supply of housing, and in this piece, I don't know who's quoted as saying this, but we want to address the problem of foot traffic in Boston, which is at half of pre-pandemic levels. And that vibrancy of foot traffic will encourage workers to return to the office. And I have to say that I don't think you have any evidence that will happen. Maybe that could happen, and I agree that you don't want a bunch of former office buildings falling into disrepair because nobody's going into them and they're not being converted into housing. I'm on the same page there. But don't convince yourself that by doing so, you're going to transform the city into this brand new thing compared to what it was years before. Keep your goal narrow here. Like, we're trying to build more housing. Housing's unaffordable in Boston. This will do that. Great. If you're trying to change the tone and feel of a city through converting commercial office space into housing, I'm not so much on board there, and I think you might miss the mark when all is said and done. Let's take a quick break. When we come back, I want to talk a bit about interest rates and what's being referred to today as an interest rate cash trap. What's an interest rate cash trap? We'll cover that next on the Financial Exchange.
Miss any of the show? The Financial Exchange Show podcast is available on Apple, Spotify, and iHeartRadio. Hit the subscribe button and leave us a 5-star review. This is the Financial Exchange Radio Network. Revocable and irrevocable trusts are commonly used to protect your assets, but there are significant differences between the two. Don't take chances securing your future. Call Cushing & Dolan right now at 866-848-5699 and get their brand new guide called The Differences Between Revocable and Irrevocable Trusts. Cushing & Dolan are experts in elder life planning, and they can answer critical questions that you may have as you determine which trust may be best for you and your family. The guide contains crucial information about a variety of topics, including the income tax effects of both trusts, ways to leave assets to your children, as well as many other factors you should consider in the estate planning process, such as your net worth, your age, and your marital status. Call today. 866-848-5699. That's 866-848-5699. Or request the guide online from their website, legalexchangeshow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Armstrong do not endorse each other and are not affiliated.
Hi, I'm Lisa Hughes. This Veterans Day weekend, help honor all who have served our country and join WBZ for the annual DAV 5K, a run or walk to support disabled vets here in Massachusetts with housing, transportation, and other critical support. Saturday, November 9th at DCR's Castle Island in South Boston. Let's thank all who have sacrificed for our freedom and help our heroes on their road to recovery. Visit DAV5K.Boston to register or donate today.
The DAV 5K Boston is presented by Veterans Development Corporation.
Creating a trust helps you prepare for the unknown. Revocable and irrevocable trusts are most common, but contain significant differences. Cushing & Dolan's new guide called The Difference Between Revocable and Irrevocable Trusts may help you choose the right trust for you and your family. Call 866-848-5699. That's 866-848-5699, or request the guide online at legalexchangeshow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Armstrong do not endorse each other and are not affiliated.
The rules regarding inherited IRAs changed a few years back with the passing of the Scour Act, and with the law being updated again in 2022, it's even more important to develop a strategy to help you make the right decisions regarding your retirement accounts. Hi, this is Chuck Zada from the Armstrong Advisory Group. Inheriting money from a spouse is common and will likely be a painless process for you. However, your heirs could be subjected to lofty tax bills if the distribution of your accounts are not coordinated properly, especially if you're inheriting one from someone other than your spouse. Don't let this happen to you. Call the Armstrong Advisory Group at 800-393-4001 and request our new guide called The Complexities of Inherited IRAs. That's 800-393-4001, or you can request it online at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
For 40 years, Cancer Support Community has been a relentless ally for anyone impacted by cancer, with free services provided online and in person, with their newest location in Massachusetts. Connect with Cancer Support Community Massachusetts for free emotional support, educational resources, patient navigation, financial counseling, and more. 617-797-3391. CancerSupportMass.org, CancerSupportMass.org.
It happens all over Massachusetts.
Can you tie my shoes?
In every home and every community.
Be careful on your bike.
Learning can happen anytime, anywhere.
We'll see you at practice this weekend.
And no matter how learning takes place in your family's life, Daly is there as your partner. The Massachusetts Department of Elementary and Secondary Education. Never stop learning. Find out more at mass.gov/back-to-school.
Sponsored by the Massachusetts Department for Elementary and Secondary Education.
The Financial Exchange Show podcast drops every day on Apple, Spotify, and iHeartRadio. Hit that subscribe button and leave us a 5-star review. You're listening to the Financial Exchange Radio Network.
Paul, for years when I've been doing my day job, meaning not the radio show, but rather financial advice and working with clients, there's been a common conversation that I've had to have, which is, hey, you're too aggressive, and if we end up hitting some sort of market crash, you could really damage your retirement portfolio based on what you're doing. And that was a pretty common chorus that I saw play out through a lot of the 2010 decade of conversations that I was having, I find myself in a much different position today, which is, it's not to say that those conversations aren't still happening and you don't still run across investors in those places, but far more often I'm finding myself talking to people about the risk of inflation on their financial success and how actually being too defensive with their money could end up being a problem for the long term. And specifically that has to do with holdings in cash that people have. That for some people is not an issue, but for a lot of folks, I see just a lot of money sitting in cash holdings. And in my mind, there are some reasonable and good reasons in terms of holding, let's say cash or money markets or short-term treasuries. And then there's some not so great reasons. In the positive column, if you're holding cash because you have a specific goal in mind in the short term, like, hey, I am holding this cash because I need to make a tuition payment, or I need to buy a home, or the second interest rates get cut, I'm planning on investing in equities. That one I consider to be a bit of a market timing story, so I'd be a little bit concerned about that one. But at least they're logical and explainable reasons as to, I'm holding this cash for these reasons. In other cases, I see people saying, I'm holding cash because it's paying the best interest rate right now. And that happens to be true, but it is probably not something that's going to be permanent, and that's where I get a little bit concerned for investors out there.
That's where I agree with you completely, Mike. Particularly the last point you make there is just, it's not permanent, it's not forever. And so certainly it all comes back to what are your objective with the funds, and I don't think that's fully covered enough in this Wall Street Journal piece that we're referencing regarding a cash trap, that if the funds are for those objectives that you mentioned previously, purchasing a home, tuition payment, short-term obligations, totally makes sense to continue to hold them in cash. Everyone should have an emergency fund. That type of thing should be in money markets. But from a longer term perspective, those people who think that they can run their retirement portfolio just in CDs are missing the mark with this idea that perhaps 5% is what you can get today. But we all have lived through this just 3 years ago. Less than that, really, 3 years ago, where you could not pick up 5%, and you'd be lucky enough to pick up 2% on a money market or any type of debt instrument. So committing to that as a long-term strategy, I think that's misplaced, but certainly it has its place, these money markets for shorter-term objectives. But this idea that you're just going to continue to sit with your retirement portfolio collecting 5% for the next 25 years, obviously we all know that that's misguided.
Right, and if they do get cut and suddenly we run long-term inflation at, say, 3% instead of 2.5% where it's been, and you're only earning 2% on that money market, then all of a sudden you put yourself in a very difficult position, and you find yourself playing makeup on the second half of that. So these are not simple things to address. I fully recognize that, and you're sitting on, maybe it's cash from a home sale, or maybe you rolled over a 401k or switched jobs and you're sitting on this bucket of cash. And right now, like I said, you can go buy, according to Charles Schwab right now, the yield on a 1-year treasury bond is sitting at 5.15%. And that's nothing to sneeze at. I don't disagree. But you do have to take a look at the long term and recognize that probably won't be the case forever. And if you're trying to assess those decisions as to how that, quote unquote conservative or safer bucket of money is going to contribute to your retirement, give the folks at Armstrong Advisory Group a call. Let us walk you through that logical process of planning out for where your liabilities are going to come in the future and how your money is going to be tied out to them. The phone number for the Armstrong Advisory Group, 800-393-4001. You can call and speak to one of our representatives and schedule time to meet with us in person at any of our offices across New England. Again, that phone number for the Armstrong Advisory Group to schedule your free consultation is 800-393-4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Paul, I'm going to cite some good news here along with some confusing news. So the good news, according to Vanguard, the combined contribution rate to 401ks remains at an all-time record of 11.7%. According to Vanguard, I think for Fidelity it's closer to 15%, but both are saying that the amount of money that workers and their employers are putting into retirement is higher than it has ever been. At the same time, according to multiple surveys, between 65 and 78% of Americans right now are living paycheck to paycheck. According to payroll.org, it's 78%. According to Forbes Advisor, it's only 40%. According to Lending Club, it's 73%. According to CNBC, it's 65%. According to Harris polls, it's 65%. And I don't really understand how 78%, to take an extreme example, of Americans can be living to paycheck, while at the same time the average contribution rate to 401ks can be sitting at all-time highs. It doesn't seem to play out one-to-one on this.
Well, I mean, those retirement paychecks, contributions, those are shelved away, right? You don't have access to them, so you're kind of forfeiting a higher net paycheck by putting more into your retirement account. I do agree.
But my point would be, if you are putting money into your 401k, by definition, you are not living paycheck to paycheck.
Right.
Let's start there. If you're doing that, you're not living paycheck to paycheck because you are saving for your retirement. And so I honestly think that the data from Vanguard and Fidelity is pretty good because it's raw numbers. The data when people say that they're doing one thing or another thing doesn't really play out to me. But one concerning piece that was kind of tucked into this data that I thought was important is that this year, 3.6% of participants in Vanguard 401ks took a hardship withdrawal, which is a record high. I know 3.6% is still a small number, but that is a record high that Vanguard has seen, and 40% of those withdrawals were in order to avoid home foreclosure or eviction. So, the savings rate is good, but the number of hardship withdrawals is also pretty high. We've got to take a quick break, but we have a lot more to cover in the second hour of the Financial Exchange, including an update on the labor market and comments from Fed policymaker Mary Daly. That's next.
Building a solid financial strategy is a core element to enjoying your retirement years. That's why you need advice that you can count on. At the Armstrong Advisory Group, we understand the challenges of positioning your assets to help you maintain your wealth over time. Our goal is to offer advice that is both suitable and in your best interest. When you hire one of us, you hire all of us so you can be comfortable knowing that every advisor in our firm is dedicated to helping you create a realistic plan for your later years. Visit us today at armstrongadvisory.com and sign up for a free, no-obligation planning session. Click the Get Started button at the top right corner of the homepage, and you can select the day and time that works best for you. Go to armstrongadvisory.com and let us help you secure your financial future. That's armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Are you retired like me and you just found out you owe the IRS a ton of money? Well, what would your life be like if they took your retirement savings away from you? They can do it, and your property. If you owe the IRS back taxes or you haven't filed in a while, the Tax Relief Line is here to help you. They can stop the IRS from taking your retirement savings. If you qualify, you could have your tax bill reduced to zero. That's right. If you're retired and you owe the IRS a lot in back taxes, you could have your entire tax bill reduced to zero due. The IRS has now hired thousands of new employees, so they're ready to come after you. Don't let them take your retirement savings or property. Make this free call now.
800-251-2153. 800-251-2153. 800-251-2153. That's 800-251-2153.
For 40 years, Cancer Support Community has been a relentless ally for anyone impacted by cancer, with free services provided online and in person, with their newest location in Massachusetts. Connect with Cancer Support Community Massachusetts for free emotional support, educational resources, patient navigation, financial counseling, and more. 617-797-3391. CancerSupportMass.org. CancerSupportMass.org.
This is the Money Matters Radio Network, WBNW 1120 AM and W275 CM FM, Concord, Boston. The Money Matters Radio Network.
Sometimes we know what's next. Other times, it's impossible to know. Life can change in an instant. Don't be caught standing by the next time someone's heart stops. Knowing CPR gives you the ability to act and takes you from bystander to lifesaver. CPR is a life-saving skill. Join the nation of lifesavers today by learning CPR at heart.org/nation. National support for CPR education provided by Elevance Health Foundation.
Hi, this is Chuck and Mike from the Armstrong Advisory Group. We have a guide this month titled The Complexities of Inherited IRAs. Mike, with how the inherited IRA picture has changed in the last few years, one of the things that a lot of people need to consider is how to minimize taxation, not just across their own lifetime, but on a multi-generational basis once they're gone.
Yeah, and quite frankly, prior to these changes, IRAs were often used, especially Roth IRAs, as a kind of multi-generational inheritance plan. And these new rules have completely changed that, like I said, for most beneficiaries of retirement accounts. And so a lot of the planning that was done prior to 2020, if not haven't been looked at again, just might run contrary to your entire thoughts of what you did before these changes.
It seems to me that it makes sense now you've got to consider the tax situation, age, and other characteristics of your beneficiaries who might not be spouses when figuring out who to name on your IRAs.
Yeah, not only that, and a lot of that stuff was considered prior to, but maybe you've got two kids with vastly different income situations. Do you consider naming one the traditional versus the other the Roth beneficiary in order to minimize total taxation across generations? These are complicated issues that I know it might sound like just applies to a small subset of Americans, but most people these days have a retirement account.
Our guide this month, again, it's titled The Complexities of Inherited IRAs, and the two ways to request it are by phone or online. Website is armstrongadvisory.com, or you can call 800-393-4001. That website, again, is armstrongadvisory.com, or the phone number is 800-393-4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. Creating a trust is oftentimes the first step in the estate planning process. It helps you prepare for the unknown as well as the inevitable. Revocable and irrevocable trusts are the most common types of trusts, but there are significant differences between the two. So before you make that crucial decision, call Cushing & Dolan at 866-848-5699. Ask for their new guide called The Difference Between Revocable and Irrevocable Trusts. Let them help you understand which may be right for you and your family and protect the wealth that you've achieved throughout your working years. Protecting your assets is paramount to being able to enjoy your retirement years. So call right now, 866-848-5699, and get your free guide today. Give yourself the peace of mind you need as you build your estate plan. Again, that number is 866-848-5699, or request the guide online from their website, LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Armstrong do not endorse each other and are not affiliated. There's no better place to vacation than the United States Virgin Islands. St. Croix, St. Thomas, and St. John have everything you need to enjoy a spectacular romantic getaway or a week-long family vacation. From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. The weather is perfect all year round, so book now and experience the most beautiful beaches anywhere in the Caribbean. World cuisine, iconic history, a wide variety of water sports, and an energetic nightlife. There's no money to exchange, no passport required, and travel from New England could not be easier. Make your plans now by going to visitusvi.com. Learn about all three islands and plan the ideal vacation for you and your family. America's Caribbean paradise is waiting for you. So head to visitusvi.com for more information and to reserve your trip today. Go to visitusvi.com. That's visitusvi.com.
Hi, I'm Lisa Hughes. This Veterans Day weekend, help honor all who have served our country and join WBZ for the annual DAV 5K, a run or walk to support disabled vets here in Massachusetts with housing, transportation, and other critical support. Saturday, November 9th at DCR's Castle Island in South Boston. Let's thank all who have sacrificed for our freedom and help our heroes on their road to recovery. Visit DAV5K.Boston to register or donate today.
The DAV 5K Boston is presented by Veterans Development Corporation.
Creating a trust helps you prepare for the unknown. Revocable and irrevocable trusts are most common, but contain significant differences. Cushing & Dolan's new guide called The Difference Between Revocable and Irrevocable Trusts may help you choose the right trust for you and your family. Call 866-848-5699. That's 866-848-5699, or request the guide online at legalexchangeshow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing and Armstrong do not endorse each other and are not affiliated. The Financial Exchange is produced by Money Matters Radio and is hosted by employees of the Armstrong Advisory Group, a registered investment advisor that provides investment advisory services. All opinions expressed are solely those of the hosts, do not reflect the opinions of Armstrong Advisory or anyone else, and do not guarantee profit. Investments can lose money. This program does not offer any specific financial or investment advice. Please consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong and Money Matters Radio do not compensate each other for referrals and are not affiliated. This is the Financial Exchange with Mike Armstrong and Paul Lane. Your exclusive look at business and financial news affecting your day, your city, your world. Stay informed and up to date about economic and market trends, plus breaking business news every day. The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. Help us support our great American heroes by visiting DAV5K.Boston and making a donation today. The DAV 5K Boston is presented by Veterans Development Corporation. This is the Financial Exchange with Mike Armstrong and Paul Lane.
Welcome back to the Financial Exchange. We have markets in mixed territory this morning as Nvidia is having a bit of a rebound, up a few percentage points. The NASDAQ dragging that up 147 points, or 0.8%. The S&P is up about 11 points, or 0.1%, and the Dow off about 219 points, little more than 0.5%. At 9 a.m. this morning, we received data from S&P Dow Jones Indices on the Case-Shiller Home Price Index. Showed that home prices, again, continuing to appreciate, up a good 7.2% over the last 12 months when you look at the 20-city index. And then finally at 10 a.m., we received a reading from the Conference Board on Consumer Confidence. That showed a downtick in the month of June. Went down to 100.4. That's from 101.3 in May. As a reminder, on Friday of this week, we have a reading on inflation from the Personal Consumption Expenditures Index. That's the Fed's preferred measure of inflation. And expectations there are for a flat increase, so basically no increase month over month on total prices, a very slight 0.1% increase on core prices. So we'll be covering that on Friday's show. That data is released at 8:30 a.m. Paul, anything else catching your eye in terms of markets or big stories this morning?
No, I think those cover the main ones, Mike.
So Mary Daly spoke yesterday, one of several Fed officials speaking this week, as they do almost every week these days. And she had a few things to say about the state of the labor market. And I think, the important piece that I would point to here is that the unemployment rate, in spite of the fact that we've had no months of net job loss, the unemployment rate is now sitting at 4%. That is up fairly substantially over the last 12 months. We had a low, nearly an all-time low, but a low in the last 12 months in July of last year of 3.5%. And so you've now seen about a 0.5% increase in the rate of unemployment. And I'll bring up that 0.5% increase number as a somewhat important figure based on something that we've talked about before, which is the SAM rule. Now, we have not triggered a SAM rule at this stage. It's SAHM if you're trying to look this up on your own. It's named after Gloria Sam, who was a Federal Reserve official herself. And what she found at looking at previous recessions, I think every recession since the 1940s or something along those lines, is that they've been defined by a period where unemployment increases by more than 0.5%. And so the SAM rule says, look, if you see the 3-month average low of unemployment compared to the 3-month average high in unemployment increase by more than 0.5%, then you are very likely in a recession, according to this SOM rule. And real time where we are right now on that 3-month rolling average is at about 0.37%. So yes, the total unemployment rate has climbed by 0.5%. The SOM rule trigger has not occurred at this stage. But, that would be one of my main concerns right now. And I think one of the concerns that the Federal Reserve is struggling with is inflation truly our highest risk at this stage? Or are we seeing a change in the labor market that might not be getting fully reflected in the data at this point? And quite honestly, I don't know the answer. I don't think anyone at the Federal Reserve knows the answer. And it's going to be a wait-and-see game. But I think a lot of minds are starting to shift towards the risk of recession compared to the risk of higher inflation from here.
Yeah, the labor market is really the key to focus on, as Mary Daly highlighted here, and it is something that basically where we sit from a labor perspective right now, still are having jobs being added, still have an unemployment rate that historically is very strong, but it seems as if the data that we're getting is that employees are being maintained at companies. There isn't, a tremendous amount of firings that can be gleaned from the data, but the idea of adding new employees seems to be less and less prevalent than it was certainly in the heights of everything in 2022. There's a lot more hesitancy out there from companies to take on new workers, but definitely a reluctancy to let any existing workers go. So that is really going to be a huge focus. I mean, we probably won't get our next jobs report, Mike, I would imagine, until a week plus, and with the holiday, who knows if it falls in the second week of July. But certainly the labor market is a big area of focus heading into the back half of this year.
Yeah, and why I think a lot of people are pointing towards some sort of labor market divergence here is because, as Paul pointed out, according to employers, still at least retaining their employees and some robust hiring. And we see that confirmed, by the way. We're not just relying on employers saying this. We see it confirmed in filings for unemployment. We'll get those on Thursday. But every week we've seen these initial jobless claims, and they have not been much to be concerned about. Have they been a little bit higher recently? Yes, but only by a little bit, and certainly not indicating mass layoffs or anything along those lines. But when you talked to households, more of them are saying, hey, I'm not working right now. And that's where we get that unemployment rate. And so there's definitely this, I think, split in the data right now, or at least there was in the May data. As Paul mentioned, we'll be getting that unemployment data for the month of June. I think it's next Friday. I'll have to double. Yes, next Friday, July 5th, we'll be getting that June unemployment data, and we'll see if that data continues to diverge. But I do think that that's raising as one of the preeminent risks of 2024 and 2025 that, hey, maybe inflation actually isn't what we need to be worried about. Larry Summers disagrees, by the way. He has a piece in Market Watch today railing on the Fed for being too focused on recession and not still focused enough on inflation. But we will see. There's definitely a divergence of the data happening right now. Mary Daly's citing it specifically, and I know other Fed officials are at least as concerned as she is about it at the moment. It's another day, and the European Union has charged another company with anti-competitive behavior. Yesterday, they charged Apple with with basically being anti-competitive with the way that their App Store marketplace works. Today, charging Microsoft for anti-competitive behavior tied to how they bundled together their Teams product with Word, Excel, PowerPoint. And to break it down here, they have a product that competes directly with the likes of Zoom, Slack, and several other companies that do video conference and workplace chat features. They developed this over the last few years. I think really it probably existed prior to COVID, but really got a boost during then. And what they did is said, hey, you're automatically going to get this product if you subscribe to the Microsoft Office suite of products. And for a lot of companies, they said, okay, well, why am I paying Zoom $40 a user per month when I'm already including this in my package? And I'll be honest that, running a business and looking at a technology myself, there have been times where I've said, why am I paying for Slack and Zoom and Microsoft Office all at the same time when a lot of them do the same things. And so we as a business, for example, used to use Slack as a product years and years ago. And we converted over to Zoom because it was included there. And there have been times where I said, hey, let's ditch Zoom and go with Microsoft Teams instead because it's already bundled into a lot of these products.
From a pricing perspective, you just would pay the bundle for Microsoft. It would just be included with your suite of Excel and Word there, the Teams access, correct?
They've actually now had to go about unbundling this because they've been concerned about this lawsuit from the European Union. This was pretty well forecast. So I can't claim to be intimately familiar with Microsoft's pricing options. You can apparently get access now to PowerPoint, Excel, and Word without purchasing the Microsoft Teams platform, which in and of itself is a pretty robust platform, and so they apparently unbundled some of these things now. But really the damage was done there, right? Because if you suddenly switched over from Zoom, or Zoom wasn't really meaningfully harmed here, I don't think, but take a lesser known video platform. If you suddenly switched over to Microsoft Teams because of this pricing feature, you're not going to go switch back now that they're unbundling it. You generally don't make this switch multiple times as a business.
Oh, absolutely. Slack is the one that's probably harmed the most by this whole thing, and they were obviously acquired by Salesforce, so they had an exit, which was fine for their shareholders, I would imagine. But it's certainly an issue that has been ongoing with Microsoft for years. They reference here the regulators in the 90s and 2000s were focused on Microsoft bundling Internet Explorer browser with its offering of tools, and that's how Internet Explorer became kind of like, it seemed, just the default browser out there. And now Google Chrome, I would imagine, I'm just going off the top of my head on this, is more prevalent in general than the Microsoft. I think it's Edge now that is their browsing system, and the same thing applies with their media player. So it is amazing, Mike. The EU is not messing around. They're really taking some big shots here.
I was going to say, so Monday was Apple, Tuesday was Microsoft. We've got to expect
watch out Google and
Meta
Meta
with something on Wednesday.
Just a
let's take a quick break, and when we come back, and have a little bit of trivia for you next on the Financial Exchange.
Tune in for Trivia, brought to you by Applebee's. Every day at 11:20 for your chance to win cool prizes. Text us at 617-362-1385 and use keyword Applebee's. Complete rules are available at financialexchangeshow.com. This is the Financial Exchange Radio Network. There's no better place to vacation than the United States Virgin Islands. St. Croix, St. Thomas, and St. John have everything you need to enjoy a spectacular romantic getaway or a week-long family vacation. From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. The weather is perfect all year round, so book now and experience the most beautiful beaches anywhere in the Caribbean. World cuisine, iconic history, a wide variety of water sports, and an energetic nightlife. There's no money to exchange, no passport required, and travel from New England could not be easier. Make your plans now by going to visitusvi.com. Learn about all 3 islands and plan the ideal vacation for you and your family. America's Caribbean paradise is waiting for you. So head to visitusvi.com for more information and to reserve your trip today. Go to visitusvi.com. That's visitusvi.com.
Inheriting an IRA was a straightforward process until the passage of the Secure Act in 2019 and the more recent changes that have made things a bit more complicated. Hi, this is Mike Armstrong from the Armstrong Advisory Group, and it's really important that you develop a strategy to deal with these changes to the law, or you and your family could face significant tax consequences in the future. If you've inherited money from your spouse, the process remains relatively simple. But if you're inheriting an IRA from someone other than your spouse, there are numerous issues that you'll want to be aware of to protect those assets. Call us right now at 800-393-4001 and ask for your copy of our new guide called The Complexities of Inherited IRAs. That number again is 800-393-4001, or you can also request it online from our website, armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. Revocable and irrevocable trusts are commonly used to protect your assets, but there are significant differences between the two. Don't take chances securing your future. Call Cushing & Dolan right now at 866-848-5699 and get their brand new guide called The Differences Between Revocable and Irrevocable Trusts. Cushing & Dolan are experts in elder life planning, and they can answer critical questions that you may have as you determine which trust may be best for you and your family. The guide contains crucial information about a variety of topics, including the income tax effects of both trusts, ways to leave assets to your children, as well as many other factors you should consider in the estate planning process, such as your net worth, your age, and your marital status. Call today. 866-848-5699. That's 866-848-5699. Or request the guide online from their website, LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Armstrong do not endorse each other and are not affiliated.
We are the Debt Destroyer Network. Any debt you have, credit card, tax, student loan debt, call now for free information that helps you destroy your debt. It's great advice. Plus, when you make this free call now, we have debt destroyer experts ready to help. They can show you how to destroy your debt and get your life back on track. Debt problems don't have to be overwhelming. You can live stress-free and debt-free. Credit cards, medical bills, IRS tax problems, even student loan debt. Learn about free programs offered by the credit card companies, hospitals, and even the government that can help slash your debt. Call the Debt Destroyer now for free information. Call now. 800-430-8804. 800-430-8804. 800-430-8804. Again, that's 800-430-8804.
Miss any of the show? Catch up at your convenience by visiting financialexchangeshow.com and clicking the on-demand icon where you'll find all of our interviews and full shows. This is your home for the latest business and financial news in New England and around the country. This is the Financial Exchange Radio Network.
Trivia is brought to you by Applebee's. Take your friends or family to any area Applebee's and enjoy half-price late-night appetizers after 9 p.m., including boneless wings, spinach and artichoke dip, and warm pretzels dipped in beer cheese. And don't forget to join Club Applebee's to enjoy exclusive deals and specials. You'll get a free appetizer just for signing up. Now, that's eating good in the neighborhood, void where prohibited, dine in only. Continuing our state capital trivia here, as we've been doing over the past few weeks now. There are more than 60 U.S. cities or towns named after Christopher Columbus, but one state capital was the first U.S. city to be named for the explorer. Trivia question today: which state capital was the first U.S. city to be named after Christopher Columbus? Once again, which state capital was the first U.S. city to be named after Christopher Columbus? Be the ninth person today to text us at 617-362-1385 with the correct answer, and you win a Financial Exchange Show t-shirt and be registered to win a $100 gift card to Applebee's. Be sure to include the keyword Applebee's in your text, and we'll give away that Applebee's gift card on Friday's show. 617-362-1385, and the ninth correct response will be our winner. See complete contest rules at financialexchangeshow.com.
Paul, I want to talk briefly about credit card fees, and I really do think we can keep this rather brief. But if you've ever tried to pay something like your rent or your property taxes via credit card, oftentimes the city or your landlord will tack on a processing fee because it costs a whole bunch of money for those credit card transactions. And I'm not sure who needs to hear this, but don't pay a 3% credit card processing fee in order to get a 2% cashback reward. It seems pretty basic to me, but I'm just going to throw it out there as that's probably a bad idea, and you shouldn't do it.
That is well said, Mike. That is very well said.
I don't understand why the Wall Street Journal had to write like a 3-page article on this exact subject, because it comes down to that. Like, hey, I know that sometimes the benefits are a little bit more complicated than that. I get cash back, other people get airline miles or rewards points, but you can fairly easily translate that back into dollars and specifically percentage cash back. And usually it's between 0.5% and 2%. You don't get a whole lot more than that in most cases unless you're in one of those introductory phases or some special category. And so, yeah, I think that's my major feedback is don't spend more money to make a smaller amount of money. That's a stupid idea.
And particularly don't carry a credit card balance. I've run into this a couple times, and whenever the situation comes up on the show, I like to mention it for the listeners out there where talking with some client about some excess cash that they have and perhaps investing in a money market or treasury, something like that, and then later in the conversation they divulged that they have a credit card balance. And I said, wait a minute. Stop the record here. You're paying 20% interest, and we're talking about trying to pick up 5. That's the same sort of that's the same sort of deal where I don't care how well the market does, it will never do 20% on average for a long period of time. So pay that off ASAP. It's not worth it, and it's not worth chasing rewards if you're going to be bludgeoned by the 20% interest that the credit card companies collect on your balance.
Yeah, the more and more I read about people's credit card problems, the more and more I get on board with Dave Ramsey's set of advice, which is just to never use them. And I disagree because I use a credit card for pretty much everything, and it helps me track my spending, and I'm not liable for when somebody rips off my information.
Right.
But yeah, far too often I see people with thousands, if not tens of thousands of dollars worth of credit card debt, and it's like, yeah, but I got all these points.
Yeah. Great.
You shouldn't be going on vacation in the first place because you're in $20,000 worth of debt. Like, don't worry about the points. Focus on something else.
Certainly.
Another piece today are mutual funds that are there still mutual funds that are better than ETFs? And I don't know how to answer this one, Paul, but I think they're, at least based on questions that I've received, can be a fair bit of confusion about mutual funds and ETFs. And so I'm going to first start by defining what an index fund is. And an index fund is basically just an ETF or a mutual fund that makes its investments entirely based on an algorithm that's set up to measure something. So it could be the bond market, it could be set up to track the technology market, the price of gold, but there's no active management per se in there. And for that reason, index funds tend to be cheaper than actively managed counterparts. But there can be actively managed ETFs, there can be actively managed mutual funds, and so there's a fair bit of confusion between all this because the term index fund can span both ETF and mutual fund. Barron's has a piece today, are there any mutual funds that are still better than ETFs? And they go through this piece, and I find it I didn't find it terribly helpful, Paul, because for two reasons. One, they didn't really address one of the main benefits of ETFs, which is they are given specific tax treatment by the IRS where they're not required to distribute nearly as much in the way of capital gains as a mutual fund is, and they don't really address that. And then finally, they don't go about addressing performance differences of actively managed funds versus ETFs in different categories. And so without those two pieces of information, I don't find this piece to be terribly useful. But the answer is that according to multiple studies, there are now very few areas where actively managed mutual funds have had a track record of outperforming their passively managed counterparts. They do exist. There are a few areas, but by and large, the big shift over to ETFs, it's occurred mostly because the additional cost of having an active managed fund, at least in the large cap U.S. equity space, has dramatically not paid for itself when it comes to that active management. So that's the main story I think you need to know.
Yeah, that's what the history has been. It's really difficult. Perhaps there's some unique areas of the market where still active management would prevail out as a better approach, but those are going to be areas that the regular investor that is not likely going to be exposed to as often, whether it's emerging market debt or international value or international small
For Silva of the Financial Exchange Show, and I'm joined today by estate planning attorney Todd Lutzke with the law firm of Cushing & Dolan with your Financial Exchange Quick Tip of the Day. And today, we're talking about the differences between revocable and irrevocable trusts. Todd, is there a difference in the taxation of a revocable trust versus an irrevocable trust, and any difference in how you would file your income taxes?
So surprisingly, a lot of you might say, well, yeah, there should be a difference. And there is, but there really isn't. So let me explain. With a revocable trust, everything that you've put in it is going to be titled under your Social Security number, like bank accounts and brokerage accounts, etc. Whereas items that you put into an irrevocable trust, like bank accounts and brokerage accounts or rental properties, those accounts would be set up under a tax ID number for the trust. So the trust now does need to file its own tax return. It's called a Form 1041. However, these Medicaid trusts are designed by us to make them grantor trusts for income tax purposes, which means you are the owner for income tax purposes, and all the income and gain gets reported on your personal return. So while you're filing a separate return for the irrevocable trust, you're paying exactly the same tax at your own rate, just like you did before the trust and just like you would with a revocable trust.
Well, the estate planning experts at Cushing & Dolan have written a brand new guide that will help you answer the most common questions you have about the differences between revocable and irrevocable trusts. You can request this brand new guide by calling 866-848-5699. That's 848-5699, or you can also request it from their website, legalexchangeshow.com.
The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing and Armstrong do not endorse each other and are not affiliated.
Hey, listen, are you a 50-year-old person looking for term life insurance? Then you need to talk to Bob. Bob specializes in helping people find $1 million or more of term life insurance for a couple of $100 a month. Look, you need to know there's a price war in the term life insurance business, and you may be paying too much. Call Bob, and he'll shop and see how much money he can save you. Look, this could be the last term life insurance policy you ever have. Your rates are guaranteed for the next 20 years. That's right, guaranteed level rates for the next 20 years. And if you're a smoker or your health is not perfect, Bob has great rates for you too. So for $1 million of term life insurance coverage for a couple of $100 a month, call Bob right now. 800-965-7987. 800-965-7987. 800-965-7987. That's 800-965-7987. Paid for by Term Direct.
Hi, this is Mike Armstrong from the Armstrong Advisory Group. Taxation is a critically important element to be aware of when you're building your estate plan, especially when it comes to understanding inherited IRAs. The tax treatment of these accounts depends on a variety of factors, including the specific type of IRA, the relationship between the deceased and the beneficiary, and the beneficiary's personal circumstances. In this month's new free guide from the Armstrong Advisory Group called The Complexities of Inherited IRAs, will help you understand the possible tax complications you could face when inheriting an IRA. Plus, we'll walk you through the recent changes to federal rules regarding these accounts. Get your free guide today by calling 800-393-4001. 800-393-4001, or you can also request the guide at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Are you looking to volunteer for an amazing nonprofit organization that helps our veterans? The DAV Department of Massachusetts Transportation Network needs volunteers right now. This network provides free transportation to and from any VA medical appointment for veterans of all eras. To become a volunteer driver, you do not need to be a veteran or a DAV member. You just need to have the willingness to help our veterans and have a valid driver's license. Sign up now at davma.org. That's davma.org.
Creating a trust helps you prepare for the unknown. Revocable and irrevocable trusts are most common, but contain significant differences. Cushing & Dolan's new guide called The Difference Between Revocable and Irrevocable Trusts may help you choose the right trust for you and your family. Call 866-848-5699. That's 866-848-5699, or request the guide online at legalexchangeshow.com. The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing and Armstrong do not endorse each other and are not affiliated. Text us 617-362-1385 with your comments and questions about today's show, and let us know what you think about the stories we're covering. This is the Financial Exchange Radio Network.
Today's trivia question was, which state capital was the first U.S. city to be named after Christopher Columbus? That would be Columbia, South Carolina. Columbia was the first U.S. city to be named after Christopher Columbus, and it was almost named Washington instead. Winner today was Chris from Stratford, Connecticut, taking home the Financial Exchange Show t-shirt. Chris is also registered to win a $100 gift card to Applebee's, which he'll give away on Friday's show. And trivia is brought to you by Applebee's. Enjoy half-price late-night appetizers after 9 p.m. And join Club Applebee's to enjoy exclusive deals and specials. You'll get a free appetizer just for signing up. Now, that's eating good in the neighborhood. Void where prohibited. Dine in only.
Apple, in what must have been a very fast meeting, apparently rejected overtures by Meta Platforms, which, if you're not familiar, is Facebook, to integrate the company's AI chatbot into the iPhone a few months ago. So apparently the companies did have a meeting back in March, quick talks in March, and unsurprisingly, Apple said, absolutely not are we integrating a company's product, a company whom we have criticized for years on every step of the way when it comes to privacy, what they do to their customers, and how we're going to share data with you. Yeah, we're going to let that company be a default application on all of our products going forward. This meeting must have lasted 30 seconds.
Yeah, in other news, the Yankees are going to be hanging all their jerseys in Fenway Park to honor all the great Yankees. You know, it's two bitter rivals that are they're not going to engage with one another. So this idea that they even had a meeting, to me, it's barely noteworthy, because I would agree with you, Mike. It's something that probably was pretty short-lived. The rivalry between the two companies is really quite fierce, and in particular, Apple, in its initiative to basically allow for users to decide whether or not they wanted to have their location tracked within the App Store and using different products, really was a huge shot across the bow at Facebook. Now, they certainly framed it as a privacy issue and protecting users' privacy, but you know, you better believe it that really hurt Facebook in terms of marketing and what they were able to do in terms of selling ads, you know, through their products. That was a big shot.
Let's be clear. Like, Apple did all of that for two reasons. One, they are trying to build up this reputation as a company that respects your privacy more, and so that is kind of crucial to their overall image right now. But two is Apple would also like to sell you ads.
Right.
Or sell ads to businesses, right? Like, that's an interesting business for them to be in. They can make money in that. And so if they can kneecap Meta a little bit here, or Google for that matter, like, you know, that's another company that has an AI chatbot that almost definitely wasn't realistically considered for Apple. It makes all the sense in the world. They compete a little bit less with Microsoft these days, although, you know, Apple has really the only other operating system on personal computers out there than Microsoft, but they just don't compete quite as much. And so, you know, the partnership that Microsoft already has with ChatGPT was probably considered far less of a barrier to entry than, you know, working and partnering directly with Google and Facebook. Although at other times, let's be clear, Apple has had no problem whatsoever partnering with Google on, for instance, search, where they've taken millions upon millions of dollars from Google to make them the default web browser on there. So, you know, Apple's okay with privacy issues so long as they're getting paid a whole bunch of money by that competitor.
Yeah, it's interesting, their strategic position here, Mike. Apple is really trying to be the host or the exchange for all of these AI bots, and kind of admitting that they're behind the eight ball in developing their own. So why not be at the forefront of allowing for others to be partnered with the millions of iPhones that are out there?
Revocable and irrevocable trusts are commonly used to protect your assets, but there are significant differences between the two. Don't take chances securing your future. Call Cushing and Dolan right now at 866-848-5699 and get their brand new guide called The Differences between revocable and irrevocable trusts. Cushing & Dolan are experts in elder life planning, and they can answer critical questions that you may have as you determine which trust may be best for you and your family. The guide contains crucial information about a variety of topics, including the income tax effects of both trusts, ways to leave assets to your children, as well as many other factors you should consider in the estate planning process, such as your net worth, your age, and your marital status. Call today, 866-848-5699. That's 866-848-5699, or you can request the guide online from their website, legalexchangeshow.com.
The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and/or Armstrong Advisory may contact you offering legal or investment services. Cushing and Armstrong do not endorse each other and are not affiliated.
Paul, Paramount Plus is upping their price tag to $12.99 per month, and I have to say that I'm sure their viewer is going to be really disappointed.
I was doing a morning radio call where I was covering this piece here, Mike, and I had to prep myself a little bit on what is on Paramount Plus again, other than
South Park reruns, I think.
Yeah, it's for listeners out there. It's Viacom CBS's streaming platform where you have old MTV shows, some Nickelodeon stuff, and they're partnered with Showtime, obviously, here as well. But just a surprising move. I think this would imply that they have a lot of subscribers if you're willing to increase the price. Or, alternatively, you could argue that they're now focusing on increasing profitability because the deal to partner with Skydance fell through, and that seems like the real issue here because they're in a tough spot from a debt perspective.
Yeah, I mean, Paramount Plus charging more is kind of like me saying I'm going to start charging more for basketball lessons. Nobody's interested, Mike. Like, just drop it. To be fair, according to The Verge, back in April, Paramount Plus does have over 71 million subscribers. I don't know if that's paid subscribers, but apparently 71 million subscribers, which was a 3.7 million increase over the previous quarter. Their goal is to be profitable, but not until 2025. So I guess this dollar increase is, part of that overall path to profitability here. But I don't know a single person that subscribes. I'm sorry to all of the, dedicated Paramount Plus subscribers out there. I don't mean to offend you. I don't know anybody that pays for this.
Well, you got access to the Showtime library, but even then, it's kind of slim pickings at this point. But
yeah. For a point of comparison, Netflix has around 270 million paid subscribers worldwide. That's as of the first quarter of 2024. So this is a far smaller platform that probably has a much longer path to profitability. It's just with all of these platforms that came out there, they all released this stuff because, well, frankly, it's the same type of thing as, car makers with their electric vehicles. They all felt that their shareholders were demanding it. So they rolled out these streaming platforms that have cannibalized their cable business and I don't think done anything to increase the overall interest in their content or the quality of their content or their overall profitability. In fact, all of these platforms have been losing a lot of money for a number of years. And so it seems... At the time, it seemed like something you had to do because Netflix was getting so much interest over the last decade. But in hindsight, it sure seems like it was a bit of a misstep so far, and very few of them actually finding profitability with these products.
It's difficult. I mean, the cable bundle isn't doing much better, so the alternative was streaming, but they're 10 years plus behind Netflix in terms of their competitive advantage. And so I think it's a huge learning curve. You first have to come in cheap to get people on your platform, so you're losing money on that side of things, and you have to build out a library that's so attractive that people are willing to pay. But it's just a long grind of profitability, and when interest rates skyrocket and inflation goes up, that puts even more pressure on your business if you're going to have this growth strategy that Netflix was able to get away with when money was cheap and interest rates were low. They ran it at they let millions of people share accounts, and they've been able to turn on the spigot because they got to that mass scale. But it's hard to do if you're going to be punished by Wall Street during that time for losing all the money, rightfully so.
But Netflix and Apple and Amazon, they all have something that Paramount doesn't have here, which is content that's nowhere else.
Right.
Like I don't think there's anything on Paramount Plus that I can't go consume by logging into my cable package. And while I know there's a lot of talk of cutting the cord and getting rid of cable, the vast majority of people still have some form of watching network television. And so, I don't know, like, you know, Apple TV is nothing, you know, fantastic. It's not like they have a vast library of content, but pretty much everything on there, the only way to consume it is on the Apple TV streaming platform.
Right.
And if you're not going to have that feature, or at least some mix of that feature, like Disney's a bit of a mixed bag where, you know, a lot of their stuff is on network television, but some of it is exclusive to the application. If you're not going to have that, then I don't really know what attracts me to go pay $13 a month on top of my cable package for this type of thing. But maybe I'm not the target audience, I suppose. Let's take a quick break here. When we come back, going to have some stack roulette on the Financial Exchange.
Missed one of our shows? Catch up anytime by asking your Alexa smart speaker to play the Financial Exchange. This is the Financial Exchange Radio Network.
Are you looking to volunteer for an amazing nonprofit organization that helps our veterans? The DAV Department of Massachusetts Transportation Network needs volunteers right now. This network provides free transportation to and from any VA medical appointment for veterans of all eras. To become a volunteer driver, you do not need to be a veteran or a DAV member. You just need to have the willingness to help our veterans and have a valid driver's license. Sign up now at davma.org. That's davma.org.
Creating a trust helps you prepare for the unknown. Revocable and irrevocable trusts are most common, but contain significant differences. Cushing & Dolan's new guide called The Difference Between Revocable and Irrevocable Trusts may help you choose the right trust for you and your family. Call 866-848-5699. That's 866-848-5699, or request the guide online at legalexchangeshow.com. The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and/or Armstrong Advisory may contact you offering legal or investment services. Cushing & Armstrong do not endorse each other and are not affiliated.
The rules regarding inherited IRAs changed a few years back with the passing of the Scour Act, and with the law being updated again in 2022, it's even more important to develop a strategy to help you make the right decisions regarding your retirement accounts. Hi, this is Chuck Zada from the Armstrong Advisory Group. Inheriting money from a spouse is common and will likely be a painless process for you. However, your heirs could be subjected to lofty tax bills if the distribution of your accounts are not coordinated properly, especially if you're inheriting one from someone other than your spouse. Don't let this happen to you. Call the Armstrong Advisory Group at 800-393-4001 and request our new guide called The Complexities of Inherited IRAs. That's 800-393-4001, or you can request it online at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
For 40 years, Cancer Support Community has been a relentless ally for anyone impacted by cancer, with free services provided online and in person, with their newest location in Massachusetts. Connect with Cancer Support Community Massachusetts for free emotional support, educational resources, patient navigation, financial counseling, and more. 617-797-3391. CancerSupportMass.org. CancerSupportMass.org.
There's no better place to vacation than the United States Virgin Islands. St. Croix, St. Thomas, and St. John have everything you need to enjoy a spectacular romantic getaway or a week-long family vacation. From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. The weather is perfect all year round, so book now and experience the most beautiful beaches anywhere in the Caribbean. World cuisine, iconic history, a wide variety of water sports, and an energetic nightlife. There's no money to exchange, no passport required, and travel from New England could not be easier. Make your plans now by going to visitusvi.com. Learn about all three islands and plan the ideal vacation for you and your family. America's Caribbean paradise is waiting for you. So head to visitusvi.com for more information and to reserve your trip today. Go to visitusvi.com. That's visitusvi.com.
It happens all over Massachusetts.
Can you tie my shoes?
In every home and every community.
Be careful on your bike.
Learning can happen anytime, anywhere.
We'll see you at practice this weekend.
And no matter how learning takes place in your family's life, Daly is there as your partner. The Massachusetts Department of Elementary and Secondary Education. Never stop learning. Find out more at mass.gov/back-to-school.
Sponsored by the Massachusetts Department for Elementary and Secondary Education.
The Financial Exchange streams live on YouTube. Like our page and stay up to date on breaking business news all morning long. This is the Financial Exchange Radio Network.
This segment of the Financial Exchange is brought to you in part by the U.S. Virgin Islands Department of Tourism. The U.S. Virgin Islands is the perfect destination for your next vacation. Enjoy St. Croix, St. Thomas, or St. John. Enjoy pristine beaches, world-class dining, and fall naturally in rhythm with the heartbeat of the islands. There's no passport required or money to exchange. Go to visitusvi.com and book your trip today. That's visitusvi.com.
It's time for Stack Roulette. I'll let you kick things off here. Paul, what do you have for us today?
A supermarket trip might look a little bit different now as Walmart is set to unveil electronic shelf labels. So no longer will you see the traditional sticker prices at grocery stores out there. Instead, Walmart is digitizing 2,300 of its stores' shelf labels by 2026. And the problem lies here, Mike, is that they might utilize some of the surge pricing that Uber does, where in the summer when the weather is 95 or 100 degrees and there's a huge demand for water, they could perhaps increase the price of water or ice cream at those given times, because this ability to have these electronic stickers here, you can change the price within 10 seconds rather than doing the whole manual process of overhauling all of your shelves with the stickers.
This is perfectly legal. It's going to expand to many different areas, and I absolutely hate it.
Yeah.
This is the direction that everything is going recently, and whether it's Uber and Lyft charging surge pricing or whether it's Walmart charging more for ice cream on a hot day, this is the direction things are going. I'm going to take it a step further. This is not what Walmart's doing today, but this is where they're going to get to, is they're going to have sensors in these things that are going to interact with anonymized data about your cell phone. And so when Paul Lane walks into a Walmart store, they're going to know enough about you in terms of your spending abilities, in terms of all sorts of stuff, to be able to deliver specific pricing to you. And McDonald's is a perfect example of this, where they're not doing this necessarily in their store. But if you've been to a McDonald's recently, you've probably noticed a really big push to download our app. Hey, $5 worth of savings, download the McDonald's app. What they're doing with that information, once they get that application on your phone, they're able to see so much stuff in terms of your battery life, your message traffic. There was even cases where they were finding, I don't remember if this was McDonald's specifically or another company, but hey, we know that Paul Lane is getting paid on the last Friday of every month, and so we're going to charge him more on Fridays of that final day of the month, because we know Paul just got paid and he's maybe willing to pony up for a higher priced menu item. And so this, I just have to, this sucks. Like, this is direction that everything is going. It's going the same direction that airlines have been for years.
Right.
And
right.
They play these same games. And again, is there anything illegal about this? No. It's not like Walmart and Target are colluding on pricing to say, hey, let's all raise prices on ice cream because it's 105 degrees out, and we can really, take it to the Paul Lanes of the world. But I hate this, and I would love to see enough people get upset about it to really push back. There's another study that I found, and Uber never admitted to this, but it was a newspaper in Europe, and I'm forgetting where, I want to say Belgium, took a look at several different Uber rides, and they tested it out and found that consistently Uber was charging higher prices for folks with lower battery life.
Huh. Wow.
Basically insinuating that, hey, if your phone's about to die, we know that you don't care about the price. You're not going to be willing to wait for your ride because you won't be able to call one in a few minutes. So you better hop in now, and we're going to charge you more.
Wow.
Now, whether or not that was just a coincidence, or I doubt there was a real scientific method there, but those are the things they're going to be able to do in the future. And the only reason they're not doing it right now, one, it's a little bit pricey to implement on something like, a package of peanuts at Walmart. But two is they want to make sure that we don't absolutely revolt at the idea of this happening. And I'm here to tell you that we should revolt at the idea of this because it sucks. It is brutal, and it just leads to all of us paying different prices for different things and having no idea what the price is for Paul to go to Walmart versus Mike to go to Walmart.
We're going to have to stock up on burgers and hot dogs at Christmas and stash them away so we're not subject to the manipulative prices that July 4th would have. Everything's got to be in reverse.
Right.
It's like buying your Christmas tree on December 26th.
Well, that's what Chuck does every year is he buys his Christmas lights, the week after Christmas for all the on sale. And, we might have to be buying our burger meat and just stocking it in the freezer for months upon months because nothing tastes better than a freezer-burnt cheeseburger on July 4th. I was going to go slightly off the stack here for my scam of the week, which is definitely a new one. A Boston woman saying she was scammed out of thousands of dollars. Megan Bates was in Boston Friday when she went to an ATM in Central Square in Cambridge. She went to the ATM, took out some cash. A man called her back because apparently there was extra cash sitting in the ATM that she missed. She went back because he was allegedly trying to help her, found an extra $10 bill in the ATM. He very rapidly said, hey, let me just help you out real quick, pretended that he was working for the bank, had her enter her PIN. Quick sleight of hand there, handed her back an ATM card that was not her own. She put it back in her wallet, walked away with her extra cash that she thought she was entitled to, logged into her account a few hours later, and this guy had gone to 3 different ATMs and withdrawn a total of $12,000 out of her bank account.
Wow, that's quite a con.
That's a brazen scam. That's a brazen scam, right? We hear a lot about these, pig butchering or all these different crypto scams. This is getting back to the.
So how do you have her number?
He pretended he was part of the bank and helped her close out the transaction, so had her enter her PIN, and he just looked. Wow, pretty smart. Pretty scammy. Don't fall for that type of thing. Markets remain in mixed territory. Dow off 286 points, 0.75%. S&P up 17 points, 0.33%. NASDAQ leading the way up 208 points, over 1.1%. We'll be back at it tomorrow. Have a great rest of your day, folks.